The Cantillon effect is in effect. I don't even know if I'm pronouncing that right. I'll explain what I mean coming up, but the world's 500 wealthiest individuals saw their wealth increased 40% in the last year and a half. Guys, the money printing continues. The Cantillon effect is in effect. I'll explain coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Corhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. So Richard Cantillon, I'm going to say Cantillon, okay, until someone corrects me. Go ahead and leave a comment below if I'm saying it wrong. But this is an Irish-French economist back from what, 1700s, 1800s, and he had he was an economist, so he had some philosophy, some approaches, some ideas about monetary policy, and really paved the way through an essay, through some works of his on political monetary policy, and helped shape a lot of the thinking that is still involved today, people still use today. And well, I want to explain the Cantillon effect because it is in effect right now. Like his essay, his philosophy, his hypothesis, you can see playing out in real time right now. How? I'm going to show you. So basically the Cantillon effect is, listen, when money is printed by a central bank or by a government, when they print the money, it's not neutral, meaning it doesn't automatically get distributed evenly to everyone and it's all fair. That's not how it works. That might be the intention. In fact, the intention actually might be that it's not fair, that it's not neutral, that it actually goes directly to the people who need it the most. But that's not what happens either. So Richard Cantillon actually said, listen, when money is created, when it's printed, it's not like water being poured over an ice cube tray that evenly fills in each area. It's like honey, boom, being slapped onto an ice cube tray. It will eventually spread out and cover everything, but it's lumpy and it's slow moving. And he talks about how money, when printed, actually flows through areas that are that it's most efficient, okay? Before it spreads its way to everyone, it goes in a certain pattern, and we're seeing that play out right now. There has been massive amount of stimulus created, money printing in the US, in Europe, in Japan, all throughout the globe, and we're seeing the Cantillon effect happening right now. Take a look here just in the US at the money supply. This is the M2 money supply. So if I could say it crudely, this is how much money is sitting around out there in the economy at our disposal. So checking accounts, investment accounts, that sort of thing. Look at how much money has been printed, okay? Look at how the M2, the money supply out there in circulation has absolutely skyrocketed. And then look at that little line in there. On the opposite, it's overlaid, but it's on the opposite side of the chart. That's the velocity of money, which is how quickly a dollar is being spent. If you notice, now this in and of itself proves the Cantillon effect is in effect, okay? But I'm just going to use this to help illustrate the point, as opposed to have this be the point. The more money that we print, the less quickly money's being spent, okay? So that means money is being printed and it's sort of going to places where it's just being hoarded, or it just sits for a while. It's not being distributed very quickly and evenly throughout the economy. We've printed a whole bunch of money, and what that has meant is prices, assets have gone up in value, but that doesn't necessarily translate to people buying and spending this same dollar over and over again. The velocity of money is sort of like a table at a restaurant. How quickly can that one table, that couple, that family be served and then have a meal, pay their bill, be on their way, and then get another family at that table, and then they be served, eat their meal, pay for their meal, have another family come in, right? How quickly is that table being turned over? How quickly is that dollar being spent? And there's an inverse relationship. The more money we're printing, the more money there is out there in the system, but the less frequently a dollar is being spent. So then Richard Cantillon basically said, listen, when money is being printed out there, very, very quickly asset prices go up in value. Asset prices go up because now there's a lot more money out there. So there's more money chasing after too few of goods. Therefore, supply and demand, prices go up. So we've seen houses go up in value at the fastest rate in decades, okay? Houses are now more expensive than they've ever been before, passing 2008. You guys know that. The stock market went up almost immediately. I didn't think when the Fed and Congress announced their first stimulus, I did not think that was going to be the bottom of the market. It did. Stocks went up instantly, okay? We've seen commodity prices skyrocket as well. And we've seen food prices skyrocket as well. If you looked at the chart of what beef has done, the price of beef, it is just unbelievable how expensive beef is compared to where it was 2, 3, 5, 10 years ago. Same with chicken, same with corn. Like this stuff, the price is just getting outrageous. All of that filters through what you saw last week, which is inflation. There's no hiding anymore. CPI, inflation, it's 5% year over year. There's no hiding anymore. It's 5%. That's outrageous. Over the past couple of months, it has been, prices have gone up very, very quickly. So this is the Cantillon effect. Asset prices will go up immediately, making it harder for people, for the average person to buy assets, buy and own assets. Second, prices will go up just for regular goods and services. We will see inflation. So assets will go up in value instantly. And then goods and services will go up as well after that. Therefore, the average person, the average, Joe on the street needs to grapple with higher prices for assets, making it harder for them to buy assets, while they're also struggling to overcome higher prices at the grocery store, higher prices for regular old goods and services. They will eventually, the average person eventually will see their wages go up, but not until after and not in the same magnitude as asset prices have gone up and inflation has gone up. Therefore, what is the eventual outcome of all of this money printing? At least the Cantillon effect says it's a greater disparity in wealth, where there's a greater disparity and divergence between those who have and own assets and high income and those who don't. So take a look at this chart. I mean, this shows the net worth of the top 1% going back to 1990 and the net worth of the bottom 50%. So we're comparing 3.2 million people, that is the top 1%, versus 165 million people, okay? So the top 1% has seen their wealth absolutely skyrocket, and take a look at the trajectory. Take a look at the trajectory through the 90s, okay? It was going up, but a decent slope. It plateaued with the tech bubble, and then as different programs were created, i.e., housing prices started going up way up significantly. Wealth went up, extremely fast, came down a little bit in 08, 09 as asset prices went down, and then it's absolutely surged at a completely different pace, a completely different slope from 2010 until the pandemic, and then now you can see it's growing at another slope that you can't take the slope from the pandemic, you can't compare it to any other time. That is at another magnitude. The wealth of the top 1% is growing compared to the bottom 50%. And you could argue, hey, there's a whole bunch of factors that could be at play here. I don't know. Guys, it seems as though Richard Cantillon 250 years ago said, this is what happens when you print money. You print money and think it's going to evenly be dispersed among everyone. No, it doesn't. You might even print money thinking we're going to help those that need it the most. That's not what happens either. When the first stimulus came out, I thought, might as well just give this money to Amazon and Apple. I mean, no one's going to be able to go spend this money at restaurants or do the things that would help those that are struggling, that are hurt most from this. It's going to go to the online retailers and to the gadgets and those sorts of things, the areas that actually were still operational and likely didn't need the help themselves, right? And that's of course what we saw. We saw Amazon and Apple just absolutely skyrocket. But that's the Cantillon effect. Money doesn't move neutrally and fairly through the system, okay? If there was ever a way to define fair, it moves based on efficiency, and that causes asset prices to skyrocket immediately. It causes inflation to happen there for a period of time afterwards, and then will eventually trickle down to the average individual, but not until after that average individual has had to struggle with higher asset prices and inflation. Therefore, they've found themselves falling behind even more until they have higher wages. So what's the solution? Run for president? I don't know. Like, this is the thing. We will see now that there is officially 5% inflation out there, the highest inflation that we've seen based on one measure since 2008, based on another measure since 1990. Okay, we'll see if that slows down the money printing. I personally suspect that it won't. How does this apply to you? I would encourage, even though this is a window into what's happening in the economy and what's happening out there that's not within your control, I would use this to then focus in on what you can control. Okay, what are the things you can control? Managing your expenses, making sure you're saving the right amount, making sure you're investing the right amount, making sure you're paying down debt, being responsible. So work with your certified financial planner, make sure you have a stable financial foundation. My question as I looked at this data was, well, where do we go from here? Like, what would need to happen for this diversion, this wealth inequality gap to all of a sudden shrink? It hasn't shrunk since a long-lasting recession, right? 2000 and 2008. So is that what is needed? I don't know, but whatever it is, make sure you're getting prepared. Make sure you're taking your own responsibility to do what you can with the resources you're entrusted with to achieve however you define financial success. So work with your certified financial planner on that. If you don't have a CFP, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or just give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.